Welcome to the 2023 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Sunday, August 2023 edition. Today, we're just going to briefly talk about the stock market fears, mortgage rates rising in the next Federal Reserve meeting, what that could mean for the U.S. economy, the European Central Bank economy, and the world economy as we get into the critical third and fourth quarters of this year here. Ladies and gentlemen, a lot has been going on. Our thoughts and prayers are with those families in Hawaii, Maui, of course, the fires devastating them, as well as our thoughts and prayers are with us on the mainland here in California as Hillary, Tropical Storm Hillary, continues to bring rain through the Imperial Inland Empire area of California, as well as the mountain communities who suffered so much during the winter with the record snowfall. Now they're going to get record rainfall up in the mountains north of LA and north of Big Bear and east out there in Nevada and Las Vegas. So our prayers are with them at the beginning. So now, ladies and gentlemen, the NASDAQ falls for a fourth straight day in a row. That was on Friday, this past Friday. And notches its longest weekly losing streak since December. And so now that the Federal Reserve Bank has signaled that they're not going to be lowering rates anytime soon, there's not going to be the pivot that we thought, that many senior economists thought that there would be a pivot going on before the end of this year. That's likely not to happen in the next 3 to 4 months here as we head into 2024. So the NASDAQ, as you can see, was down 26 points or 20%. The Dow ended the week lower by 2.2%. It's worse since March, beware the Ides of March. And so now we see that the 10-year bonds is rising to its highest level since October 2022. We see that the Federal Reserve minutes continue to indicate further interest rate hikes, could also be ahead as inflation concerns remain. Gas prices have continued to rise. As you know, the average price of gas is now above $3.92 US a gallon for regular, and it's now approaching $4 a gallon in many places in the Northeast, the Southeast, the Midwest, etc. Now we have fears of domino effect, according to MarketWatch.com. Fears of a contagion. China's property values is having to crash. Some of the housing market, real estate is coming down in value, and that could bring down the quote U.S. Treasury yields from a 16-year high. So the U.S. markets are relatively immune or insulated, right, from the broader pressures in China due to the strength and resilience of the economy. However, we still can be affected by it because we're in a globalism economy right now. And Evergrande, as you remember, China's Evergrande back in 2011, it collapsed. It filed for Chapter 15 bankruptcy protection in New York late Thursday. But now we have Country Garden, China's largest private real estate developer, missed payments on some of its bonds. Now it's on the edge of default and restructuring. Could that trickle over into the United States? We know that the housing market, mortgage rates have soared over 7%. An unaffordable housing market is becoming even more expensive. So renters, buyers, landlords, we're all in the catch-22 here because of the situation of rising rates. Rising rates mean that as borrowing power goes down, purchasing power goes down for most Americans. But also at the same time, rents have been increasing in the top 20 to 30 cities in the United States, mid to large cities in the United States, as you know. And so it's just become a miserable market right now because, buyers are looking to buy, sellers are looking to sell, but they can't find a happy medium because the prices are either sold, they're pricing them out, sellers are pricing too high with the FOMO, the fear of missing out, and buyers can't get a great deal because the short supply that claim that is choking up the system, and people are snatching it up with these cash offers, or investors are snatching it up with these cash offers, buying up blocks of neighborhoods to turn them into casinos, condos, mixed-use development, who knows what else. And this is the dilemma that we're facing here. As you can see, tracking the rise and fall of mortgage rates in the United States. It's 30-year fixed mortgage. As you can see, now it's up to 7.9%. In some cases, it was already up to 8% mortgage. That's if you have, now remember, this 7.9%, 8% is if you have prime credit, meaning a score above, FICO above what, 720, 750. You're talking prime credit. If you have anything below that, a 680, a 620, 580, then you're getting upwards of close to 10% interest on a 30-year fix, which is absolutely crazy, and it's only going to go higher. Let me know in the comments, what do you think is going to be the breaking point with this inflation? How high do you think it's going to go before the Federal Reserve Chairman Jerome Powell just says, look, we're going to have to raise interest rates by like 2 basis points instead of the 25% basis points they have been doing in these meetings. The housing market eventually has to cool down for the simple fact that the the median income of Americans, even the top American earning Americans, are not going to be able to sustain to afford 1 to 2 houses on this type of pace that we're going to right now. Like I said before, right here, I just mentioned buyers who are still in the market, finding historically low available inventory. And the low available inventory is not in the high-end market, not in the upper luxury homes, that are 500K to $1 million. We're talking to the starter homes that are around 350, 400K, 250K. There's a shortage of those homes. Now, whether that's done intentionally or not, that's something that is of debate. But there is this quote-unquote shortage, and it's at the worst possible time. Because now we have auto loans going up as well as housing loans. Now, what do you think, which bubble will pop first? The housing market bubble, inventory bubble, or the auto market? I believe the auto market will pop first because there's so many cars sitting on the lot at these CarMax dealerships, at these at these repo lots. So many cars are sitting there ready to be purchased, but the prices are just absurd. Nowadays you can't get a truck. You try to go purchase an F-150 Raptor or just a regular truck, a Toyota Tacoma, you can't get it for under 45, 50K, 60K most of the time minimum for these basic trucks that used to cost nothing 20 years ago, or maybe 25 years ago. These trucks were not at these absurd prices. Now we've got Jeep Grand Cherokees going for $80,000 and just a huge amount of money. So the next Federal Reserve meeting is scheduled for July 2020. The next Federal Reserve Chairman meeting, the FOMC meeting, is scheduled for September 19th, 2023, the 19th and 20th. Now, they believe, many economists believe that they're going to raise the rates again. I believe they're going to raise at least 25 basis points. A 50 basis point rate hike would be more appropriate given the level of inflation that we're still seeing in food, utilities, gas, rents. Everything else is not including in that CPI number. But unfortunately, they're going to play it safe and go 25 again, and don't rip off the Band-Aid too much. But they need to go ahead and rip off the Band-Aid because inflation is not slowing down as much as the media has reported, and much as you and I know, it's not slowing down. Now, another thing to watch out for in this Federal Reserve meeting also is that not just the interest rates, but look at the bond yields. If the 10-year bond continues to rise, that means that we're going to be in significant trouble here in terms of bank lending tightening, the bank loans tightening up on like personal lines of credit, corporate lines of credit, and refis, home loan, HELOCs. Watch out for that, because if that happens, if this rate hike happens in September, then you're going to see a huge credit tightening. And then also some people have been reporting out west that they've been cutting credit limits on certain cards. Certain credit card companies have been cutting down credit limits by $2,000 or $3,000 in some cases. So look out for that as well too, ladies and gentlemen. Anyway, stay safe, be blessed, and I will talk to you soon later on this week once we get into some more financial news that's going to be worthy of discussion as far as earnings and as far as jobs report that's going to come out this Thursday at 8:30 a.m. Okay, talk to you soon. God bless. Thank you.